In this video, traders are going to look at which should I trade, Forex or crypto? Stay tuned. Hey guys, a very warm welcome to you. Alright, so this is my opinion on whether you should trade Forex or crypto. Let's say you're just getting into the market. Let's say you're not interested in stocks, you're not interested in indices, not interested in commodities. You're like, okay, it's Forex or crypto. Those are the big things that we see advertised a lot. Crypto trading, Forex trading, which one's right for you and which one should you get into? First of all, guys, whatever you're trading, risk. Watch the risk. I'm going to hope and understand that you guys know the risk of trading before you get into it. But that being said, let's look at actually from an objective perspective, which is a better one to trade. If you're prepared to take risk, the big risk that comes with trading, and you understand it all and you want to play the game, which one's good for you? Okay, so let's have a look. So Forex versus crypto. First of all, let's look at the spreads. Spreads are the difference between the buy and the sell price. So in other words, this is how much it costs you to trade. The wider the spread, the more cost it is to trade. Just think of it like this. If you were to buy and sell immediately, how much would it cost? The lower that cost, the better it is for you, because the lower your overall cost. If you've got to pay a lot of money just to place the trade, it's like a commission basically. You know, it's a commission or a spread, however it's wrapped up, it's still a cost to do business. And so the lower the spread, the better. Now, the spread is most definitely lower in Forex pairs, especially when we look at things like Euro US dollar, GBP US dollar JPY. The major pairs, the spread is very, very tight. It's the smallest it's been for forever, and it just keeps getting narrower and narrower and narrower. It's almost like it's free because it's so tight. However, if you look at trading Bitcoin, or if you look at trading some of the cryptos, now if you were to trade those through a spread betting broker, and check out our sponsor, by the way, if you want to spread bet crypto, a link in the description below. But if you were to trade through that, then the spread is much wider than it is for FX. Now, obviously, if you're going to go direct and buy the actual underlying, it's different, but you still have a transaction cost, and it's still a lot higher to do a deal with in crypto than it is FX. So I'm going to give a win here for FX. Right, now let's talk about safety. So what do I mean by safety? So how safe are your funds? Now, if you're trading with an unregulated FX broker, then they're just as unsafe as anywhere else. However, if you're trading with a broker who is regulated, if you're trading with a broker, whether it's a spread betting firm, whether it's a Forex firm, whatever it may be, that's regulated, then you have some protection. I've done kind of videos on that. I talked about what level of protection you get. However, you compare that to perhaps trading crypto and directly on a cryptocurrency exchange. Now, maybe some of them are regulated, some of them are not. I don't know, but all I see, guys, is a lot of exchanges getting hacked and people losing the whole of their money. Now, I'm sure some of you crypto guys are going to say, well, you know what, there's a way of protecting that, cold wallets, etc. Sure, I understand there's ways of protecting stuff, but from where I look at it, I see that a lot of times these guys are getting hacked and people are losing an awful lot of Bitcoin. And as well, because you've got a wallet basically with a string of numbers, if that gets stolen, it's gone, right? Ultimately, if you've got a currency position, as long as it's a regulated firm, then that currency position is there. Yeah, sure, the position may well be closed, but the valuation is still going to be realized in your P&L, and that will be protected if you're trading with a regulated firm. So what am I talking about with safety? I'm going to say, and actually the one thing though, guys, if you do choose to spread bet or use a CFD to have a crypto exposure rather than buying the underlying Bitcoin or Ripple or Ethereum, whatever it may be, then you still get the benefits of being regulated. So you could spread bet crypto and still get the advantage of the moves up and down, but still within a regulated environment. So you don't have to actually own the physical Bitcoin to trade it and to make money potentially from the moves to the upside and to the downside. So do you know what? I'm going to give these one each on that, because if you're trading crypto directly on the exchange, I think it's not so good because you're vulnerable. If you're trading FX on an unregulated broker, again, not so good. But if you're trading stuff in a regulated environment, which you can do with crypto, not by buying the underlying, and you can do with FX, you're all good. All right, so volatility. Volatility, you know what? This is a double-edged sword, right? You could say the more volatility, the better. And I lean towards that side. I think that you can dampen the exposure of volatility, or dampen the impact of volatility, should I say, by reducing your position size. And crypto is going to win for that, right? Crypto just goes crazy. There's no doubt about it. Crypto is the one thing that absolutely just goes nuts when it really wants to get going. Big percentage moves. But don't forget, guys, you know, that currencies can be volatile at times. They can be swinging around at times. But let's just keep it fair with this one. There's no doubt that I think cryptocurrencies win the volatility fight here. All right, so opportunity. Now, there are multiple different cryptocurrencies you can trade. However, there are only a few which have a reasonable enough spread and reasonable enough liquidity to trade them, right? FX market, however, there are hundreds of pairs. There's major pairs which have really, really tight spreads, some minors and some exotics, and the spreads start getting wider as you go. But you can trade lots. There's multiple different pairs. Someone's going to say, yeah, but all the altcoins and stuff. And yes, there's the argument to say, well, there's loads of altcoins as well. But I'm going to say that they're not as accessible to the average person. There's probably a handful of cryptos are accessible, whereas there's probably 100 or so really accessible FX pairs. So in terms of opportunity, if you're looking at trading the FX world, the FX wins that one, guys. Okay, so what about scalable? So let's say you become a really good trader. Let's say you've got a really good knack at finding the highs, finding the lows, and you're just good at it. How do you scale it? Well, with crypto, potentially speaking, it's not that scalable, right? The volume is okay. The volume is picking up on some of the bigger cryptocurrencies like Bitcoin. And yes, you could probably trade in a reasonable size, but can you trade in and out quickly? Can you move a big size quickly in that? You can't. You know, it's getting thicker, and yes, some people are going to say, oh yeah, but there's lots of transactions going on and you can do. But if you want ultimate scalability, FX markets where it's at. You could be at any level you want with FX and it will take the size you've got. So as you're increasing size, if you're increasing your position size, you're getting better, you want to do more business, then scalable in terms of frequency and in terms of trading volume, the FX gets the win on this one, guys. All right, resources. Now this is an interesting one. And what I mean by resources are charting packages, data, analysis, news, etc. And there's no doubt that crypto is getting more and more. There's much more available charting, like on your charting packages, you can easily chart Bitcoin and stuff. So Ethereum and what have you. So there's an even there. News as well, there's dedicated crypto sites. It's becoming more mainstream. I was first leaning onto the side, well, Forex easily wins this. But for the retail, and maybe if you're an institutional level, yes, because there's far more in stuff going on in Forex. But really now, there's so much news and information on crypto, it's probably too much. So I'm going to give those a 1 each on that, guys, because you've got charts, you've got indicators, you've got data, you've got this, you've got news flow, you've got everything you need to make your trading decision. You don't need more than that. So give those 1 each. Leverage. Well, leverage wins, FX wins this one, guys, because even though with ESMA rules, which have changed things slightly and reduced the leverage we can trade as retail traders, you still get more leverage, generally speaking, when you're trading Forex than you do crypto. Now, this is if you're trading via a spread betting broker or CFD broker. Of course, if you're buying Bitcoin direct, you've got to buy and exchange your Bitcoin for money. Whereas you're trading FX, you don't do that. You have a notional value and you pay a percentage of that notional value. So if you want to control $100,000, say, you don't have to put $100,000 into your account, you just put a percentage of that, and it could be $10,000, it could be $5,000. Again, it depends when you're watching this, current conditions, current leverage requirements, etc., and who you're trading with. But effectively, you're only putting up a percentage of the total notional value, which you don't get if you're trading Bitcoin or crypto directly. You can do that if you trade it through a spread bet or CFD, but the percentage required is a lot more because of the volatility. And generally speaking, the more volatility, the more margin you've got to put up. It's going to protect their assets as a company. All right, guys, so what have we got? We've got 3 for crypto. We've got 1, 2, 3, 4, 5, 6 for FX. So guys, FX takes the win. And that's what I think is what you should trade if you're looking between Forex and crypto. Take care, guys. See you in the next one. Bye-bye.